traders from around the world, how are all of you doing? Oh my goodness, I have missed you guys so. What a week or week and a half it has been. Man, I've missed you guys. I am back in action. It's June 1st. Today is Mentorship Monday on the trading floor. I want to give you guys a real life stock review. I'm just so excited to be back and be talking to you guys from all around the world, trading the markets. Really excited to see what's going on, man. This is good stuff. So as of right now on the DIA, we mentioned the breakout, and we talked about really in depth that the breakout was always kind of, rough in this market. We mentioned, breakouts in this market. They've been failing over and over again. Case in point right here. So take the retest, right? So this was kind of the proposed breakout right about there. This is kind of the retest and there. And we did go bullish, or at least I did go bullish. Went ahead and bought some calls because realistically, even though the Dow Jones Transport wasn't massively confirming, it was at a support and this market has been bullish. Well, the warning signal came in on the 22nd of May. 22nd of May, you had a black candle. This is actually, I call this a new black crow. The reason that I would not call this a one black crow is because the definition of a one black crow candle is a long day candle. And that's definitely not a long day candle, but it is absolutely, without question, a warning signal. It's a black candle that opens and closes below the prior day white candle's close. And in fact, it actually opened below the prior day's open. So you know for sure some people were trapped, including myself, which is no big deal. So you had the new black crow, and at that particular point in time, you really could have moved up a trigger for protective put at approximately, what price is this? 182 and some change. But if you did get triggered into protective put at 181.53, that's fine. That's how you're mitigating risk in this scenario, because if the DIA does trade lower than Friday's candle, so if we break 179.67, I do think we go a little bit lower. I do think we trade down to at least 179.08, and then probably down to about 178, then maybe 176. I still don't think this is the absolute top of the market by any means. I'm going to be bullish until something just massively changes, guys. You know that. There's no reason to be bearish. There's no reason to try to pick the top, but Friday's candle is bearish, and I got to give this a giant shout out to Brad. I really, really do. In fact, let me go and pull up his chart. I hope I'm not embarrassing him. But you guys know I'm always checking up on my boy Brad and all of you guys as traders, and it's just one of my things that I love to see what you guys are looking at. And Brad called the SPY, I think, to the penny. So he was taking my place while I was gone, and I got to give him props on this. This was majestic. Let me hop over to his SPY charts. Give me just a few seconds. This is what I love about this TradingView platform, by the way. It's so cool that I can go back, look at your guys' charts or my, the other team members' charts. And I hope he still has it saved. If he didn't, it's okay. I'll talk about it, but I don't think it's still in here. That's a shame. Well, anyway, I'll just go ahead and say that I know he did it. I saw it, and he talked about the analysis. I'm sure he shared this with the trading floor. This was a retest gap from the 22nd to the 26th was a retest gap. He drew in here a little pink line that said it would retest about 212.60, and it did phenomenally, and then rolled over a little bit. So Brad, I just gotta give you a shout out, man. Awesome analysis. It really was a retest gap. So if we hop over to the SPY, you guys will see a little bit of what I'm talking about. Here we go. SPY, and I'm gonna go to the hourly chart. And again, I did get triggered in bullish. I did get triggered into some protective puts, so I'm in protection mode right now. But here's how we knew it would retest, right? On the hourly chart, black candle gapped down. So bearish on the daily, not as massively bearish on the hourly. So trade down, here's the retest, and here's some opportunities to do some bear call spreads or something, or buy some protective puts just to mitigate losses. But there is some volume coming in here, guys, for the bulls. So I do anticipate still the market could bounce. I don't think this is the top. It could be. I'm not saying it is, but I just don't see it, right? So we still got this trend line in here. If you got your protective puts triggered, no big deal, right? Hopefully the market goes higher, and if it does go higher, we'll drop in, we'll sell some puts, we'll leg into a bear put spread, and we'll hope that the SPY goes higher. We do have, regardless, a 200-199 June week 1 that expires this Friday. So as long as SPY stays above 200, that'll be a 12% return that we're locked in. And I would give that one a 99.998%. You know what? I'll eat a hat if that does not expire worthless. You can go ahead and just write that down. All right, so here's the Qs. Qs is a little bit more bearish, but again, today's candle, these are some bearish candles, guys. It's not magically bearish, but if we make some lower lows, I'm just going to be just a tad bearish. Probably looking to do some weekly bear call spreads on some trades. But if the Qs pulls into this level, I already drew it back here, I'll buy it. So if it pulls back down to that pink level and bounces, I'll be a buyer. I mean, there's no reason not to be. Here's the IWM. And on the IWM, same thing, guys. I mean, we're getting some lower wicks today. We got a little bit of a bearish candle shaping up. We absolutely could continue lower. There's a lot of things that we could do, but the bottom thing is, and the number one thing that you can control, the things that you can control in the market is where you enter, where you exit, and how much you're risking. If you're freaking out, if you're worried, if you're stressed, if you sweat, if you're having heart palpitations, if your blood pressure is going crazy, you're risking too much money. Don't risk that much. Only risk the amount that you can control, that you can contain, that you're okay with risking, that your body is okay with risking. It takes discipline. It takes consistency, just like going to the gym. If I go to the gym, I have plenty of wow, tongue tie. I have plenty of friends who could bench press 250 pounds, but I can't. I'm weak. I have a bird chest, right? I could probably bench press maybe 170. But if I want to get up to 250 and be incredible like Heidi Nielsen and a few other beasts out there, I could try. I would slowly and incrementally get stronger over time. Well, that's what you have to do with risk, right? If you're freaking out, if you're worried, if you're concerned, you're probably risking too much. So take small bites, win in it if you can. And I do believe that there are some trades setting up on the markets, right? We could be getting into a head and shoulders. That's a really, really ugly one. In my opinion, I still think we're making higher lows. I still think we're making lower highs. And I still think we're going to break out bullish at some point, get parabolic. Right? A lot of people hop in bullish, and then the market has a correction. I could be wrong. We'll see. I'm happy to trade it bearish. In fact, this was one of the most bearish and most profitable trades we had in a very, very long time on NSC. This is actually this one and another one I'm going to show you in just a second. NSC. We unraveled, myself and Brad Golson and a few others, we unraveled a bull put spread. We had a 97.50-95 June bull put spread on NSC. And we talked about unraveling on the 20th and also on the 21st and hopping into a 101-102 June week 1 bear call spread, which is expiring this Friday, which will be profitable. Well, anyway, we unraveled the bull put spread on that day, holding on to the puts. And I emailed Brad, I think it was Saturday, just asking him, hey man, how'd you do on this trade? He said this is one of the most profitable trades he's ever had. He's still holding on to 3 contracts. It was a beautiful unravel. We are at some targets now on NSC, so expect a little bit of a retrace and then play the bearish move if it does, because guys, I agree fully. This is a distribution pattern. It broke a very strong support. No reason not to be bearish. So if NSC does retrace and roll over, play it bearish. But Brad Golson, I think I'm pronouncing your last name right, Brad. If I'm not, I apologize. But anyway, Brad, great trade, man. Awesome job on NSC. So I got to give a little bit of a pat on my back, my own back. I very rarely do this, but El Pollo Loco, actually did trade to my target. I exited Friday. I was on the cruise. I had this as a target, as an alert saying, hey, if I hit it. So I came back Thursday. El Pollo Loco was down. Friday, I got home. I exited the very, very low of the day on Friday, so about 20.58. I moved my target down just a few pennies, and I did exit. I had September puts, but truly the bid-ask spread was getting very, very wide. And I went ahead and did a limit order. So I think I bought these options for $380 and I sold them for about $550, if I'm not mistaken, somewhere around that. But anyway, great trade. If you guys took El Pollo Loco, this paid for my cruise, barely, because I drank a lot. But El Pollo Loco, great trade. Ron McKee, I think Ron McKee took this one. I forget who else took this one with me. But anyway, it's very, very extended right now on El Pollo Loco. If we hop over to the Bollinger Bands, which I don't look at very much, but I do look at them often in markets where they're very, very extended, and you can see we're not reaching the bottom band, which does appear that will probably pop soon. So there is a lot of support down here on El Pollo Loco. If we made it down to $19, I'd actually be looking to buy the bounce. But down in this general area, I'm also kind of considering buying some bounces on El Pollo Loco. Since the Option spreads are kind of weird. Let's hop in here and see if there's any put sale premium down at 19 bucks, and maybe you could get a good limit fill since the spreads are pretty wonky. I'll agree. So let's do maybe a June. Let's see if there's anything down here in June for the 19 put sale. And this is aggressive, I agree. So you can see the bid-ask spread is 5 to 30 cents. Open interest is 3.58. So if you could get 10, maybe 15 cents for this spread, it's really not that bad for a June expiration, especially if you don't mind owning shares of El Pollo Loco. I don't think it's really a horrific idea to own shares down at that level because you could have a great risk-reward ratio. Here's June 26th. June 26th, you have some, well, where's the puts? I'm sorry. You have a $20 put, which is really, really, I mean, that's huge bid-ask. One open interest on El Pollo Loco. So anyway, be careful. The open interest is not that amazing. That is one of the reasons why I did exit, because the open interest was okay. It wasn't moving as good as I wanted to, but I got about 50% ROI, give or take, on the trade. So I'm not going to complain about that at all. Strong support on El Pollo Loco. Guys, there's so many trades I want to look at for you. Oh my goodness. Hopefully you're just joining the trading floor at some point today or next week or this month. There's going to be a lot of big announcements coming up. There's just so many things I want to look at for you guys. Facebook, I'm liking Facebook. Still bull put spreads or put sales. I did not want to close below this low. It looks like we're getting a little bit of a hammer candle today. That is good on Facebook. I'm just more bullish to neutral on Facebook. Apple, I think if Apple, guys, takes out the low of Friday's candle, I am slightly bearish. And by slightly bearish, I just simply mean I think it's going to pull back to at least the 100 simple moving average. I really, really do. I don't know if we're going to break that low, but this is, without question, a pretty decent evening star reversal. And these two candle patterns today, this is something that I call a wicked pair candle set. Wicked pair. What an interesting pattern, right? Wicked pair candle set. So if we break the low, I really, really do imagine actually the Apple would make it down to the 100 simple and then probably bounce, probably bounce off that location. It could make it all the way down to 120 and then probably bounce. But we got the 119, 118 June week 2 bull put spread. If you want to consider if Apple moves below here, in fact, let me go ahead and just place this in, and I'll be talking about this a little bit later, but here we go. If we move lower than here, 129.72, let me write this guy in. So we can leg into an iron condor since we're already in the bull put spread. So what is today? June 1st, 15. If Apple trades lower, could leg into the, what could we do? Probably 135, 136 June week 2 bear call spread. And let's just go see how much premium that is bringing in approximately right now. I mean, it's not going to be a lot, but if you're already in the bull put spread, which was really just a LeBron James layup type of trade, it was too easy. Let's come in here and look at this, 135. You know what? That's actually not that bad. You're getting about a 10-cent spread right now. So if it moved a little bit lower, you could probably lock in 9 or 8 cents for the 135, 136. I think that's a great trade to leg into the iron condor. I don't know if I would do it just blindly as a bear call spread by itself, but it's really not that bad. This is a guarantee, confirmed guaranteed resistance. I really wouldn't worry about a 135, 136 bear call spread unless we closed above the 428 candle. A lot of traders in some covered calls for June. I'm keeping my eyes on Apple, guys, as a little bit of a bearish play. This is a bearish candle right there, and I think it's doing something like this. We'll see. It's a good evening star reversal. If it doesn't trigger, it doesn't trigger. If it does, my only real trade I think to consider be legging into that bear call spread on Apple. Netflix, and then I'll do Google, and that'll be it. Netflix, guys, I'm still bullish on Netflix. I mean, it's trading to our targets. Let me see if the fib tool is working on TradingView. It wasn't about 2 weeks ago. Okay, it is working now. Very, very good. All right, so I have a target at 638. We're getting very, very close to it. I mean, we have already reached all of my main targets on Netflix as far as shorter term trades are concerned. Longer term trades, I still think we'll reach 638. At this point, I'm just waiting for Netflix to come into the 20 exponential imbalance. We haven't touched the 20 at all, right? So 10, 10, 10. I'm looking for a little bit of a pullback, bounce off the 20, maybe even the 50 exponential moving average on Netflix. So still bullish on that. And Google, We got a June bull put spread on Google. I'll probably look at this more tomorrow for a bear call spread up here somewhere to leg into an iron condor. Bottom line, guys, Google is sideways. Look at that. Look at this. That is the definition of sideways. I love it. I'm so excited. It's June. I'm pumped. I hope you're pumped. Hope you got a chance to watch the water taste test that I did. It's on YouTube. If you get a chance, check it out. And I'll be sending you guys a few more updates this week, Wednesday and Friday, some real life stock reviews. I'm going to be in Toronto next week. So if I have any Canadians out there listening in, let me know if you're in the Toronto area. I'd love to meet up with you. And I'm going to be in LA. That's right. The City of Angels, California, 4th week of June, thanks to a good friend of mine, Brian Bodie, who's actually flying me out for a birthday present. So appreciate you, Brian. Love you, man. All right, guys, I'll see you later. And until next time, remember, love life, live life, and trade it.